Welcome back to my YouTube channel. Olamide. Right now, I'm going to be talking about when to buy and when to sell as a forex trader using SMC concept, using supply and demand zone and support and resistance. I'm going to be telling you what buying and selling is in forex. For those of us that might be new to forex, that don't know what forex means, I'm going to be explaining what buying and selling means. I'm going to be telling you, explaining when to buy and when to sell. What does demand and supply zone mean? What does demand and supply means in forex and resistance? I'll be showing you how to draw your perfect demand zone and your perfect support zone as a forex trader. So and also I also backtest it together so you can get to understand what I'm trying to explain in this video. Make sure you watch it to the end and don't forget to like this video, subscribe, and also turn on the notification bell so that you can get more of our. Without wasting your time, let's go straight. Right, so understanding what demand is and what supply is, in a very simple and basic term, demand means to request, to ask for something, but I would say demand also means to buy. Yes, demand also means to buy, while supply means to sell. So, but when we are talking about the zone where you buy and the zone where you sell, so we're talking about the demand zone. People tends to buy when they believe that okay, this price is actually favoring them. When price went to a particular level, drops down to a particular level where they understand that thing is actually something of value, and the price comes down. Let's say gold now. Let's say for example, gold is selling for a price of $1,000. Then the price comes down to $500. Then people tends to buy at that particular point. You buy it and keep it. You keep it because you understand that the price will pump up. The price will go up. Then when the price go up, at a particular point, you know that okay, this price is high. It might start coming down very soon. The price might come down. Let's say price go back to 1,000, then it went straight to 2,000. So at that point where it's 2,000, you sell, then you keep your profit. So that's why people explain supply and demand to mean supply. You sell when supply, which means sell. You sell when the price goes high. You also buy when the price comes down. So how do we apply this thing I've just explained now to forex market now? Now I will start showing you how to draw your demand and supply zone perfectly. So now this is my screen. Then I would like to show you this using an analogy first. So I'll draw a line to perfectly explain that. So let's say this is market structure now. A price an uptrend, a price make an higher comes down to form a low. Then this high breaks the structure to the upside. Then price come down to this level, tested this level, break the structure to the upside. You all understand that that's how price move. Then price comes down, price comes up, then price comes down again to this level. Then it breaks the structure to the upside, break the structure to the upside. So now I'm going to use this to explain what demand zone is. At this point where price was actually moving up, this was where the price started moving up. This was the lowest point when price already got to this high. Then people will be expecting to buy at this point if price comes down to this point. So we'll mark out this zone, and call it demand zone. Let's use let's say these are 4 hours demand zone. Then price comes up again, break this structure. This is the highest price. Let's say this is the 1,000 naira price that we were at before. Then price comes down to this 500 naira price. Then when price was now going up, it broke this structure. This recent 1,000 dollar. Then price broke the structure to give $2,000. Then we'll be expecting that okay, if price comes down to this lowest price, let's say this is now 700. This is now $700. So we're expecting price to come down back to this $700. And when price comes there, we'll buy again till price breaks the recent structure, the 2,000 structure. Now price is giving us 3,000 here now. Then price comes down again. So you see, we are buying low. We are buying low now. So anytime price comes down, we buy. And when price goes up, it gives us a very maximum profit. So that's exactly what buying low is. Now let me explain what selling high is now. Alright guys, so as I explained from the analogy that I made earlier concerning the demand and supply, I'm going to be making an analogy concerning the supply zone and supply that I explained recently. So in a downtrend, in a market structure where price is going down, price is reducing, price is going down, then understanding where to sell could be like this. Let me explain. Using a supply zone. So at a particular price where point where price is $1,000, then price get depreciate to $500. Then we're expecting that price comes back up before we can sell. So because that's why we say high. So at this point, when price comes back up, probably comes back to $1,000 or comes back to $900. Let's say price come back to $900, then price we sell from here, expecting that price will depreciate more than $500. Then we're expecting that price will depreciate to $400. And when price depreciates $400, we're expecting to sell again at this point, at this area. When price comes to this area, let's say price get back to $700. Then when price get here, we're expecting that okay, as we're selling, price will depreciate again. Then price will reduce to almost probably $200. Then like that. That's how we keep on selling. Now, marking our supply zone could be like this. So this is actually the zone we're expecting to sell from. Marking our supply zone. Okay. Could be like that. Marking our supply zone could be like that. So and when price comes back here too, same thing, mark our supply zone, expecting to sell from this area, expecting to sell here. That's it. This is exactly what it means to buy at to sell at supply zone and buy at demand zone. That's what it means. These lines actually is actually an analogy to explain when to buy and when to sell. Now I'm going to be showing you on the chart now so that you can understand it perfectly. Let me show you on the chart so that you can understand it perfectly. So go to the 4-hour zone, which I already explained. If you watch my recent videos, you understand that I according to my strategy, I make use of 4-hour zone very well. So this is actually a demand zone. How to draw a perfect demand zone? There's something we call order block. I know for those that might not be familiar to that, order block. We'll draw out our order block, expecting that when price comes back there, that's where we'll take it. So drawing out a perfect demand zone, you have to understand what order block is: a buying order, a bullish order block, and a bearish order block. So a bullish order block here now is the last bearish candle before the bullish momentum. So now this is where price started going up, right? So marking our last bearish candle, which is this black candle here. Some people's chart to be red, but I just prefer mine to be black. So I marked out this my demand zone by marking out this last bearish candle here. Then let me change it to demand, 4 hours demand. So when price comes back to this zone here, you already understand that okay, I want to buy. So let's carry our long position to now. We want to buy from this zone. Let's say we want to buy from the middle here. We want to buy from the middle here. Probably putting our stop loss below here. Then we want to be targeting probably a break of structure to this upside here. So our price give us we are profitable. We have almost 4 RR, almost 1 to 4 RR here now. So this is actually the perfect way to draw your supply zone, your demand zone rather. The perfect way to draw your demand zone. You understand, right? So this is how to draw your demand zone. If you actually don't understand this, you can go ahead to the comment section, drop your comment, ask your question. I will respond to every comment. Yeah, I will respond to every comment. And also don't forget to subscribe to this channel. Click on the notification button to get more of our videos, and also like this video so that other people might. A bullish order block, we explained that the last bearish candle before the bullish momentum. So the opposite goes for supply zone. So during a bearish order block, we look for the bullish candle. A bullish candle before a bearish momentum. This is a bullish candle, this yellow candle. Then that's our demand zone. Let's trace it back to this point. Our supply zone. Our 4 hours supply zone. This is a supply zone. 4 hours time frame. So when price comes back to this zone, price sold. People sell from this zone and they were able to make profit very well from this zone. See, maximum profit from this zone. Let's say we enter this from the middle. That's how I like to enter my trade. I don't really enter from the beginning. I enter in the middle after 50%. After price already more enter the zone in 50%. See, people will make up to 4 RR from this trade. If you are trading like this, you see how profitable you will be. So this is exactly how to draw your supply zone. So let's see more examples. So this is also a bullish candle, right? It's a bullish candle before this bearish movement. So let's say we'll draw this up to this level. Let's say we'll draw this up to this level for our 4 hours zone. But price didn't come back there, right? Price didn't come back there. So this is another bullish movement, a bearish movement rather. This is a bearish movement. People sold here. Then so the bullish candle before the bearish movement. Let's mark it out. For 4 hours supply. Then when price comes back to this zone, we sell from this zone again. We sell from this zone when price comes back to this zone. When price comes back to this zone, we sell again. Make sure that your stop loss is always a little bit after. Let your stop loss always be a little bit after the zone. After the zone, yeah. Above the supply zone. So now, see, we're able to make good profit, close to 3 RR. And if you're able to hold your trade very well, you see how much you make here. You make 4 RR. Good money, good return on investment. So, and even when price come back to this big zone here, price still sold from the zone. So that's how to draw your demand zone, your supply zone. How to draw your supply zone. So this actually, let's look into this also. It's actually a demand zone also. When price was moving up, price moved up here, give us a bullish momentum, break the structure to the upside. Then you can draw your supply zone, your 4 hour supply zone. Sorry, your 4 hours demand zone rather. I mean, that's what I mean. So I told you, I already explained that the last bearish candle before the bullish momentum. This is the bearish candle. So let's name it. This is our 4 hours demand zone. Then we'll buy from it. I like to buy from the middle, from the 50%, from the middle. So and I put my stop loss just below the supply zone. Then see good 1 to 3 risk reward ratio. So that's how I trade. This is how I mark my supply and demand zone perfectly, and I remain profitable in the market. So I hope you guys understand this. Let's do one more example here. This is actually a bullish momentum. This is the last bearish candle here. Then let's name our zone. So when price comes back here, we'll buy again. When price comes back to that zone, buy again from that zone. Make our stop loss a little bit below the supply zone, the demand zone rather. Then we have a good RR. Price even gave us up to close to 1 to 5 risk reward ratio. So if this actually, when I mark out my zone on 4 hours time frame, I go to 15 minutes to refine it. I refine the zone, make it more smaller, so that when price comes there, it reduce my stop loss to at least 15 pips or 20 pips, at most 25 pips. So that I can increase my lot size. You understand? In the market, you have to understand that risk management helps you to stay in the market. Yes. So risk management helps you to stay in the market. So you have to understand which lot size to use and when to use a particular lot size and when not to use a particular lot size. I already explained that in one of my last video where I explained how to use baby pips to calculate your lot size in respect to your stop loss. So you can go ahead and check the video out. Guys. And don't forget to subscribe to this channel also, so that I can get more of our content. So I hope I explained this more. Let me know your opinion, your comment. Let me know from the comment section if you understand this, or if I should elaborate on it. I should explain more on it so that you can get to understand more. So I can get to understand this video more. Alright guys, thanks for watching this video. I really appreciate that you watched it to the end, and it's your guy Olamide. Don't forget to subscribe to this channel and give a thumb up thumbs up to this video so that people can get to see it also. Thank you guys for watching. Thank you guys for watching. Much love to you guys. I love you guys. I love you guys. And I promise to always give you more content, more good content on this channel. And stay tuned for greatness I'm going to be giving you guys. Thank you. Thanks for watching. Thank you guys.